Good morning, McKenna and Michael. Thanks for joining me today. I'm interested and looking forward to hearing about Phoenix and everything that's happening there, how things are poised for recovery. I'll turn the mic over to you.
Great, thank you, Rod. So we first wanted to kind of talk about how Phoenix has been performing, and a lot of people have been looking at Phoenix compared to the top 25 markets, which it's a part of, and it's performed drastically different, which if you were to compare the top 25 markets as a whole and the United States trends, typical seasonality would follow. However, for Phoenix, there are drastic peaks during the spring or early in the year from January to April, and then during the summer, a trough, and then the demand comes back up in a typical year. And that seasonality is really what set Phoenix apart during 2020, aside from a few other demand factors, such as a high leisure demand and a drive-to market that generated a significant portion of demand. And so when you go through 2020 and compare the peak season, it's important to know how much of the revenue is generally generated during January through April. So in 2019, that was about 47% of the annual revenue. And during 2020, that was 52% of the annual revenue. And you have to think COVID began impacting the Phoenix market and the nation in March, which is mid-peak season. And so if we just looked at January and February, the difference is more drastic. So in 2019, 21% of the revenue was generated, and in 2020, 38% of the revenue was generated. And then when you look at 2021 so far, the revenue in January and February is down about 50% compared to 2020, which drives a lot of our expectations for what 2021 will look like in the market. And there's a few factors that are also important to consider. Phoenix is a heavy group market, but in a different sense than a lot of other top 25 markets, and the seasonality of that group is different. Additionally, because Phoenix was able to generate demand during the summer that was higher rated leisure demand, that helped the summer trough not be as low as other seasons. So those are some key factors to consider when you're thinking about 2020. And going into 2021, we're seeing a greater impact in Phoenix than in other locations during the first portion of the year, which is to be expected, given that many of the events are not happening at the same degree. So for instance, Waste Management Open was only about 3% of capacity. And although that didn't have a significant impact on occupancy, it had a notable impact on rate, given the lack of high VIP events and compression in the markets. And so those are some key factors that we considered in our forecast going forward and are important to understand for Phoenix historically and in the future. So additionally, there are some factors like rate and group coming back in, and Michael is going to speak to us about the forecast and what we're seeing going forward with the 2021 and future outlook for the Phoenix market.
Thanks, McKenna. So Rod, I want to start off with how we've been looking at the national hotel industry before we dive into Phoenix, because I think it really illustrates what's happening here. So nationally, our expectation was that as the vaccine was rolled out in the second quarter of 2021, demand would begin to recover and rebound, starting with leisure in the summer and then followed throughout the year with business, travelers, and group demand. And we're expecting a very similar pattern in Phoenix with leisure recovering more and more in the summer as the vaccine rolls out. But because of Phoenix's seasonality, that rollout and that recovery will be beginning in our low season. So much of our recovery will be extended into the first and second quarter of 2022. Like you said, that first quarter of 2022 will be our first peak season without any major COVID restrictions. And so that's when we're expecting a lot of the rebound for the Phoenix market to occur. So we're expecting a very similar dynamic here in the Phoenix area with demand beginning to rebound in the summer as the vaccine rolls out. However, because of Phoenix's seasonality, we'll be beginning that recovery in what's typically our low season here in Phoenix. So if we look at the forecast is for historically and in the forecasted years has been adjusted to show total occupancy rather than just the rooms open in the market, which is a key factor in understanding the forecast. But what you'll see is while the national forecast that we've put out shows very strong recovery in 2021, Phoenix's recovery is shifted more into 2022 as we hit that first peak season without any major travel restrictions or COVID-related capacity restrictions at some of our peak season events. However, as we head into 2023, we'll have the Super Bowl. And so while Phoenix will get a later start to our recovery, we're expecting some of the elevated demand from the Super Bowl to contribute to strong rate growth in that year. And as a result, we expect Phoenix to fully recover a year earlier than nationally.
Great. Thank you, Michael, for that overview. So as you're looking at our forecast, I think another important thing to point out is the negative rate in both 2020 and 2021 over the previous year. And that rate decline is notably less in 2020 than in some other markets, especially other major markets. And that is due in part to the higher leisure demand that I talked about, and as well as less group demand. So some hotels and some markets throughout Phoenix saw rate go up in certain months in the summer because they lacked the lower rated group demand, especially during the trough of the year or during the summer, which can be $100 lower than transient rate. And hotels were able to drive rate given demand from drive-to destinations and surrounding markets that had more restrictions, and people weren't also able to escape to international destinations. And so those helped to support some rate during weaker periods of demand into a typical year. Now going forward in 2021, we've already seen some notable rate declines in the first quarter, and that's due to a lack of compression from some of those major events that we mentioned. So the Open, Barrett-Jackson, the spring training, all of those have had less capacity and attendance that has contributed to both occupancy and rate being down in the first quarter. And then as we see that group build back in 2021 and 2022, that will somewhat hamper rate recovery because it's a lower rated sector. And that's especially true in many of the resort destinations throughout Phoenix.
McKenna and Michael, thanks for your time today. Those were great insights. I loved hearing about your forecast, and I look forward to some brighter skies ahead, definitely for the Phoenix market. Thank you so much.